And Sterlite Technologies in focus, Anand Agarwal, who's the CEO of Sterlite Technologies. He now joins us on the show to talk about the numbers then. And Mr. Agarwal, great to have you with us. First up, let's talk about your standalone numbers that reflect stronger than expected growth with healthy performance in telecom and even better in the power segment. If you can tell us the key takeaways from the quarter gone by and which adds color to the perspective beyond the numbers.
Sure, Kamya. Thanks for having me. For the quarter has been growing at a run rate, which we have been seeing for the last several quarters. The telecom business essentially has grown on the backdrop of great level of fiber demand that we see globally. The 4G rollout that we have seen globally moving into India, data consumption being a big part of the overall revenue story, is helping all the telcos increase their capex. And that's what is translating into a great order book as well as revenue profile for us. And we think these are early days. This sort of trend is going to continue for us. And added to the fact is that other than what we traditionally did, in terms of supply of products, we have added solutions and services to our offerings as well. And that's also helping us in creating both a stronger customer engagement as well as a better outlook for the business.
And good afternoon, Neeraj here. So if you're talking about the trend continuing, would that actually happen for the operational level as well? Because your margins cross the 13% mark. Would that continue to surge higher, or is 13% a really robust figure that you would want to stay with for some period of time?
Neeraj, the 13% essentially for us is a mix between what happens in the telecom and the power business. And it's a mix which is at two clear different levels. While telecom operates at 21-22%, power is at 6-7%. Post demerger of the two companies, which ought to happen in the next 3-4 months, we are focused a lot on the return on the capital that is deployed for the telecom business. Because as we keep increasing the services and solutions percentage in our revenue, the margin may be slightly dipping on the telecom side because it won't be as robust as what we get for the fiber business. But the return on capital deployed is going to keep getting stronger. And that's what we are very focused on, and that's what quarter on quarter we have been improving.
Okay, so let me ask you square. What's the ambition there? Where would that divided ROC be? And what do you expect to take the ROC up to?
Currently, we are at about 20-21%. We believe we can go up to 24-25% ROCE for what we are deploying on the telecom business.
Okay. Since the entities are still consolidated, let's just talk about that and the order book stack up. What is the number there? And based on the pipeline that you have, what kind of inflows do you reckon you can book in Q4?
The overall order book is close to about 4,400 crores. We have a very strong pipeline of RFQs that we have bidded. On the consolidated front, the transmission projects bit is also performing as we had promised and it was expected. We have a portfolio of 8 projects there where the total outlay is almost 10,000 crores. 4 of them have started operations where we are getting quarterly EBITDAs of about 150 crores. So, and we just last week concluded for our very first project debt bond which was a 17-year bond. So on a consolidated front, the order book is strong. On a consolidated front, the infrastructure piece is moving as per expected. As well, on the overall refinancing piece, once the projects start getting operational, we have proven that for the first time in the country as well. And we got the 4th project, the Rajasthan Atomic Power Project, completed ahead of schedule. So I would say we see the overall theme of the company, which is in delivering data and delivering electricity for the transmission, going along pretty well.
Mr. Agarwal, let's talk about your optical fiber business that is clearly operating at peak utilization, in fact, ahead of the rated capacity. Till when do you expect full utilization rates extending, and how much scope for better operating leverage than seen in the third quarter?
Kamya, we are rightly said we are operating almost at 22 million kilometers for a rated capacity of 20. We are continuing to do these debottlenecking impacts, and we are progressively going to take this 22 million kilometers to 30 million kilometers with small capital deployment over the next several quarters. And at the same time, we continue to see a pretty strong demand. The large part of our fiber demand has come from the global sales, which we are doing pretty strong what we did in China. So the India impact is yet to come, and over the next several quarters we see the deployment in India going to get stronger. And we'll need to do the right mix between what we sell in India and outside India. But I feel that we should be operating at current level of operations, pretty close to full capacity utilization.
Okay, I have one final question. You spoke about the demerger as well, and I believe that what it'll do is also lead to reduction of the debt burden. And correct me if I'm wrong there. So my question is, what's the likely date by when it will be completed? How much in annual finance costs come down for the standalone listed telecom business once the event is out of the way?
For the demerger will be done by April of this year. On a standalone front, the power piece will go out. So the overall interest cost, which runs close to about annually about 90 to 100 crores, is going to come down to maybe 60 odd crores for the telecom piece.
So now, one of the key reasons of demerger, besides debt distribution, was sharper focus on independent businesses. Now, based on the growth and expansion strategy, what milestones are you working towards over the next 3 to 5 years?
Clearly, on both the businesses, the strategies are going to be different. The power part of the business becomes very much infrastructure development business, which has a different set of investor pools. So one of the reasons that we wanted to demerge, other than sharper business focus, was also to have the relevant people who are invested in both the entities. So on the power front, it's going to be more and more driven by infrastructure development, more and more driven by what loss reduction we can do in the entire country. While on the telecom front, it's going to be driven by what's the overall data transmission network that needs to get created in the country. And within that, our role becomes both as a product supplier as well as a solution and service supplier. And with the integration of Elite Core, which is the OSS, BSS software, the portfolio gets wider and the customer engagement gets longer for us.
Well, Anand, keep up the good work. All the very best. Thank you so much for joining in today and giving us your thoughts. Look forward to speak to you more often on the forum.
Thanks, Neeraj.
That's Sterlite Tech. Extremely good numbers. It's showing in the stock as well. And the management confident of good times ahead to continue. In fact, better times to come in. Do watch out for this one. By the way, very important flashes from IGL as well. And that whole thing continues. So IGL is saying that any PNGRB order would be